This is forexoverviews.com with the euro-dollar short-term analysis. So let's start by the daily time frame. Here we can see that we got the confirmation of the stop grabber by this bar because this hike has been taken out. So the market triggered the sign of this stop grabber, and at the same time the market has produced another one. Here we can see that the market tried to shift the trend to the downside by piercing this red line, but at the end of the day it closed above it. So it's another stop grabber pattern, and it suggests that this hike will be at least taken out. If this will happen, we could get the upward breakout of this trend line that in fact is this symmetrical triangle that we are talking about. We are expecting an upward breakout of the zone, but of course we are also prepared for another market action as the downward move or even the sideways move. Okay, and also we can see that the market has confirmed a close below the 3x3 moving average, which is also this red line, but I'm not treating this as the double repenetration signal because we don't have two different tops here. We have too shallow price action to the upside here, although we have a good thrust, but I'm not liking the shape of this pattern. And of course the market could really do the downward action that this pattern suggests. This could really work, but I'm not using this sign as a directional one. And by the price action framework we can see that with this bar, market is trying to rotate on this dynamic zone of support, piercing this moving average, and if the market break the hike of this bar, it will be a signal to enter long on the market, and it will signal some upward move by the price action framework. On the 4-hour time frame, we can see by the MACD predictor that the market also produced another stop grabber, and the target of this pattern will be the previous hike, which is this one. So another bull sign that the market could do at least some splash to the upside on the next few hours. And the market is also above the 25/5 moving average, which is used by Judge Napoli to determine the longer term trend, although with just shiny price action, but still it's above it. And by the traditional moving average we can see that the price still stands above all of them, and the configuration still points to the upside, although we can see here some little crossover, but as long as the price stands above the 100 period moving average, this signs a healthy uptrend. Until now we have only seen some bull power on the market, but let me present you with the alternative scenario. Here we can see the weekly pivot points, and the weekly pivot is the blue line, and we can see that market break it below the blue line and now is trading below the pivot. It tested the line by this bar, and when the market trades below the pivot point, it tells that the main sentiment is bear and that maybe some downward move will come. So as long as the market trades below the weekly pivot point, it will tell that the sentiment for the week is bearish. Also we can see here that market has breaked below this trend line that we have talked in our previous video, retested it from the other side with this bar, now is doing some retest, and maybe it will proceed to the downside. If this will happen, the market can take the shape of this ABCD move to the downside, reaching the zone of the monthly pivot point, which is the 131.30, and can also reach the zone of 131.00, which is also the zone of the confluence support area, the confluence of Fibonacci. And we can accept a move to the zone of the 131, and if the market passes through the zone, if this breaks the zone, I think that we will be not talking about an up move anymore. I think that this will cancel the chance for the market to do any up move again. So we must pay attention to the zone, and also note that the 131 level is exactly the 127 extension of this ABCD. So this is an important zone, and if the market really breaks it to the downside, we must search for the possibility to enter short on the market. And maybe the market could also make this move, this ABCD to the upside. This is also possible, and in fact we don't know the real intention of the market with this move. We don't know if this will be this move to the downside, or if this will be the ABCD to the upside for the upward continuation, or at least for retest of the stops. And let me present you with also some possibilities that could be happening right now. Here we can see that the market is making lower lows on this line and higher highs, and if this will happen also for this week to the side of the chart, maybe we will be in front of the diamond pattern. This is drawing here the diamond pattern, which in fact is a reversal pattern. So we must wait if the market will make this pattern, and we can see that the completion of this ABCD will point exactly to this line. So if the market complete this, it will make ABCD here. If it will stop here, maybe it will continue to do this pattern here, and it can also make some wash and rinse of the stops. Or we can see also this picture here. Maybe the market is making some head and shoulders, making some medium term top here with this one, and note that this top here is almost at the 1618 extension of the swing, which is very typical for the head and shoulders pattern. So I think that the next few hours or few days will be crucial for the market. It will define the intention, it will gives us more sign of what it will really do. On the hourly chart, there is not much to comment, just that the trend has turned to the bullish side by the George-Napoli framework, and by the pivot points framework. These are the daily pivot points on the hourly chart. We can see that yesterday on the Monday trading session, market has tested the zone of the daily pivot point, opened and above it, tested it, traded in this range, in this zone, and closed the day above it, not signaling any much important sentiment. And by this exact moment, market is trading around the daily pivot point for this Tuesday trading section. By the price action framework, we can see that by this downward move, market tested the upward MA of this framework and now is holding and trading above it. So this signals bull power on the market. If we contract the chart, we can also see that market is trading above the MAs of this framework, and in fact it signals that market still has the power to go to the upside, right? So maybe the market will resume the move from the zone above this green MA. Okay, so as a conclusion, we can say that if you don't have any position on euro dollar, the best option would be to wait, to do nothing right now, to see if the market will break up to the upside. You must wait some retracement to enter long. Alright, and if you wish to take some long position, you could use this bar to enter long, could use this signal, entry long at the breakout above this bar with the stop loss below it, below this low, or even below the 131 area. But personally, if I didn't have any position, I would not take this signal, right? I would not take it because the market stands flat, the MAs are flat, maybe the market are reversing here. If you already are long, you must manage your position. Personally, I'm long on euro dollar from the zone, from the 130.44. Now I am with nice profit, and I'm managing my position by putting the stop loss below this low, because if the market breaks it, it will probably make the ABCD to the downside, and although we can accept an uptrend until the 131 zone, I'm not willing to take the risk that the market would break this area to the downside and lose all my profit. So I'm accepting a profit until the zone, and at the same time, if the market makes this ABCD to the upside or even breaks these hikes to the upside by breaking the triangle that we have seen on the start, maybe we can get some big move here. So I think that I'm on good shape by placing the stop right at this position, okay, right at these lows. So that's my overview on the market. Thanks for watching.